And 3, 2, 1. Welcome to the show. What's up, Jerry?
All right. Looks like it's working, my friend.
I know we're doing this live, live recording, but remotely. And
Remotely, we're testing.
nobody will believe what we just did for the last 45 minutes just to make sure everything sounded fine. I don't envy people
Well,
that do this I guess when they do it for a living, they probably have like all the time in the world to do it. and we just kind
I
of
mean,
like
it's
link
their
up
day
on
job.
it is. I mean, this is like 1/4 of my day job. um, yeah, the show. That's crazy, but I think it's working, man. Hopefully, it records well and everybody enjoys it. How you doing over there in TSP land?
Good. I'm doing good. It looks like I'm a little bit delayed in the video from you, but
Yeah,
we
that's just
talked
for
about
you.
that, and
Yeah,
it's gonna
that's
be
just for
fine. It'll
you.
keep on moving.
If you just stare at
And
the
I
screen
need to
and
get a
ignore what you see,
yeah. I know. I need a Navy shirt. I got to get a Navy shirt to. I mean,
you got
Iron Navy
plenty of
game's
them.
coming up.
I
I'm gonna
never
have to.
warn you
Yeah.
because I don't want you to wear a Navy shirt.
Ah, I get it. Got it.
All right, man. What do you got for us this week?
All right. So let's get it on. TSP update show 24 October 2021. Another really strong week for the market, right? C fund was up 1.64%, S fund up 1.36, I fund up a little more than 0.5%, and the F fund was down almost 0.5%. So the stock funds came off of a really strong week last week and had a great week this week. So on the show this week, we're going to take a look at the sort of an intro to TSP options in retirement. We had a pretty good handful of people talking about it on Facebook this week. What are some things to think about in terms of options for TSP in retirement? And as I started to go down that rabbit hole, and it's a much bigger conversation than what I want to put together for as a piece of the show. So I think what we're going to do is a longer webinar, and we can talk about that in a minute. But so we're going to just kind of talk through some things to think about for TSP options in retirement. And then I went back and looked at the longer term Elliott wave count that we've been talking about here for the past few months. And we've been talking about, is the 4-wave complete and all that. There's a possibility that the 4-wave that we've been talking about is at a lower degree than ultimately what the 4-wave will be. And so what that means is there's a possibility that the market can go quite a bit higher. And we're going to kind of show how that could happen. Bonus chart's going to be the banking index. It's $BKX on stockcharts.com. It's similar, not exactly the same, but similar to the S&P financial index that we've talked about in the past. And then we'll take a look at the 20, or actually it's not 20-month, it's 2-year weekly charts. All right. So TSP planning in retirement. Basically, there's a couple ways to look at how you think about using TSP in retirement, right? If you've considered TSP all the way along as a savings vehicle, then you're looking at it in a certain kind of way, right? And when you go into retirement, you're probably not going to change how you look at things, right? So I have a slide for that. We'll kind of take a look at it, what it would be like if you were looking at TSP in the way that you have all the way along in your career. The other way
So
to look at it is, good.
no. I was just go ahead and finish your thought there with the second one, and I'll jump in.
Yeah. So the other way to look at it is if you're going to invest, meaning you're trying to grow your TSP in a more aggressive way than you're able to in the construct of what TSP gives you. And in that case, you would do a rollover, right? So the question of all this is, the first question is, do I leave my money in TSP or do I roll it over into an IRA?
Right, and
That was the crux
doesn't
of the
this kind
question.
of like go down the road of what we're always talking about between being a passive investor and an active investor? I mean, maybe that's A and B of part two there, or not. I mean, it really depends on how you approach investing in general, right?
Right.
And the TSP. Like, are you taking a more passive approach? Are you actively managing it? And so, as Jerry pointed out when we kind of kicked this off, this is way too much for us to do in a show. So this is just sort of a heads up for everybody. In the Facebook group, just the public Facebook group. All right. If you're not a member in the public Facebook group, you need to go there. We might try to find out a way to like broadcast it at the same time, but we're not going to do a recording. We're going to do it live. And as I say that, we could probably do it live on our through Vimeo. So we'll figure it out. I don't want everybody to stress that, well, I'm not on Facebook. We'll figure it out. The point is it's going to be live because we're not going to record this thing. We want to have some interaction, but we're going to do a webinar on just this topic, because we could talk for 45 minutes or an hour and just barely cover, like the good points, right? We could probably talk for 3 hours on it, right? If we got really down in the weeds. But the point is, you kind of have to figure out where you fall in there, right, Jerry? I mean, like you were saying, am I using this as like a savings account, or am I, really, really working it as an investment vehicle to grow and to thrive, as opposed to just I'm parking my money there, right? Is that really the difference?
Right. So when you're in TSP and we talk about, are you an active or a passive investor in TSP, right? If you're an active investor in TSP, you're moving your money back and forth between the funds that are going up, right? You want to be in the stock funds when the market's trending up. You want to be in the bond funds when the market's trending down. But that's active investing in terms of TSP. Active investing, if you roll to an IRA in retirement, is a completely different world, right? So if you're really comfortable in TSP the way it is now, as a even when it's active, it's really kind of passive, right? You're actively managing it, but you don't have anywhere near the variety of assets that you can invest in.
Yeah, we talk about that all the time too, right? Where like if you gave this to, or one of two things, right? You could give this to an advisor. If you cannot give it to an advisor unless you roll it over into an IRA. Right? You have to put it in some other vehicle. Now you're using it as an investment vehicle and growing it and still working, and managing it after retirement. That's how we do it, right? I mean, we're not old enough, right, to really just stop everything. And even if we were, like, it's really not the age. We just know that we can keep growing it until we're 90, right?
No, I talk to my dad all the time. He manages his Fidelity account daily. I mean,
and how old is he?
That's 79, I think.
Older than us.
Older than us.
Yeah, if you asked me how old my dad was, I wouldn't know. He's older than me.
He's older than me.
A lot older. But the point is but just your dad's a good example of, like, he's a public servant, retired, and is still working his retirement account. Right, it's still growing it, but why would you not? Why would you just park? Anyway, that's our philosophy. Right. The point is, folks, we're going to do a webinar on this. We're going to put more information out. The only way you're going to find out about this is one of two ways. You have to be on our email list, right? And there's plenty of ways you can do that by going to the website and downloading the ebook, or just putting in for the little opt-in thing with your email address. Or be on the Facebook group, the public Facebook group. That's where the link's going to come out. It's going to take us about a week to put this together, but you're not going to want to miss this, because there's a lot of you out there that are in your late career, or might be getting ready to retire, or just retired, and you're asking this question because it came up, and we have lots of people talking about it on the Facebook group. So we want to address it, but we won't have enough time to do it here. So with that said, let's just keep moving.
So, right, the other piece I think you wanted to talk about was we were going to put out a poll about when people wanted to.
All right, exactly. So one of the issues we always have when we do webinars is, when is the best time to do it? Because, we got people all over the country, and we have, different days of the week that's better for the others, right? So we're going to put out a poll, and it's going to be, like 4 choices, weekday afternoon, weekday evening, weekend, whatever. Like, that's what the choices will be. But if you care, then go to that poll and help, because whatever time frame wins, that's what we're going to do, because we can't do it, all different times of the day. Obviously, we can only do it once, and we're going to do it live because we want the interaction. We want to hear questions. We want to dig into this. So anyway, we're going to do a poll on the Facebook group. If you're in there, there's like 15,000 people in there. Hopefully a good handful tell us. And we're doing this for the public. It's not just for members only. This is for everybody because we hear this question from a lot of folks. So expect a webinar, registration link to be coming out soon, either through email or the Facebook. And also the poll, just to figure out when's the best time to do it, right? The poll will obviously come out first, and then we'll send out the registration. But this might be a good time to remind everybody, at the end of this month, we are increasing our subscriber rates. We're adding a lot of things. The biggest thing we're adding right now is an app, a mobile app for Android and Apple. That'll be coming out at the 1st of November, first week of November. But look, if you're a current member, this doesn't impact you. Your rates are not going to increase. But if you're on the fence or you have friends that that you think they could take advantage of this, now's the time to do it. Because why pay more? Lock in these rates now. It's whatever rate you lock in is what you're going to have for the rest of the time you're as a member. All right, that's enough marketing pitch.
All right. So again, two things to think about, right? Either you are using TSP as a savings vehicle, and this is in retirement, right? You're using TSP as a primarily a savings vehicle, or you're using TSP as primarily an investing vehicle. Okay, so if you're saving in retirement, if you've been primarily a buy and hold type of investor in TSP, that's kind of how you manage it. You're willing to accept the two move a month rule and the noon rule, right? The two IFT rules. You can roll other qualified money into the TSP, which is a good thing. That's another whole conversation. So if you don't understand what that is, ask questions. We can talk about that. But there are ways to roll other qualified money into the TSP. In the last 2 years, they've really expanded the withdrawal options. So a lot of people like the fact that now you can pretty much every 30 days adjust the amount that you withdraw from TSP. That's a huge benefit from what it was a couple of years ago. And lastly, for anybody who's on the 6C or any of the early retirement programs, if you leave money in TSP and you withdraw it before you turn 59 and a half, you don't take an IRS penalty. You still pay taxes on that withdrawal, but you don't pay the IRS penalty for withdrawing from an IRA prior to 59 and a half. So if you're thinking about using TSP in a saving sort of mentality, these are some of the things to think about. If you're thinking about rolling into an IRA, you're thinking more along the lines of investing in your retirement, right? You're actively managing, because if you're going to passive manage the money that you're rolling into the IRA, you would just leave it in TSP. It wouldn't make sense to pull it out. But if you want to actively manage it, if you don't like the 2 rules a month, right? Because there are no IFT rules, and I put an asterisk there because there are some rules, right? You can't sell short in an IRA, for example. There are other rules that apply, but for the most part, pretty much the handcuffs are off. You can more or less day trade your
when you
IRA.
say sell short, like I know what you mean, Jerry, but I mean a way to overcome that though is like with reverse ETFs, right?
Inverse ETFs. Yep.
Inverse,
absolutely.
not reverse. Yeah.
Yep.
That's my country coming out. Inverse, reverse, whatever. But right. I mean, my point is though, although there are restrictions in an IRA, we have ways to kind of overcome them. We have no way of doing that in a TSP.
Right. I mean, you can buy Bitcoin in your IRA. Right. You could buy. I mean, you got this new ETF that just came out this week.
Yeah.
Yeah. I mean, we had Grayscale, which was Grayscale Bitcoin Trust, which is great. Has been, but now we have an actual Bitcoin ETF, which is going to be the beginning, I think, of a whole bunch of new ETFs. And what I'm waiting for actually is the crypto space ETF, almost like the crypto S&P 500, right?
Right.
Because if you remember back a couple of weeks ago, we put up the chart with the hamster and all that.
Yeah.
The reason the hamster did so, what was his name? Mr. Goss. The reason he did so well is because he's picking from a universe of assets that all of them go up. And Bitcoin was kind of maybe 50% in there. So if you could have picked the crypto that was doing better than Bitcoin, you made a lot of money, right? So the ETF that right now it's whatever the ETF is that's for Bitcoin is only tracking the Bitcoin futures price. If and when they get an overall crypto ETF, it should outperform Bitcoin by a lot.
Right.
And again, it'll be an index. It'll be the index of crypto.
And not to get lost on crypto, right? But the point is here we talked about savings versus investing when we talking about retirement and what you're going to do, right? And so obviously, if you watch this show enough, or if you're listening to us right now, you're going to sense that we're on the investing and retirement side, right? There's no secret, I hope, that people, but it's amazing to us. I know it is to me that we have 15,000 plus people in our public Facebook group, and there are folks that are just completely locked into the idea of once I retire, like there's nothing else I can do. And they don't even really think, first of all, there's plenty you can do before you retire. And that's what we really try to help people with. Right. But honestly, when you retire, the gloves come off. That's how I look at it.
You're just starting over. It's great.
And if I had to do it all over again and I was 20 something years old, not only would I be maxing out my TSP, but I would open an IRA, which is what I tell my kids now. I'm like, regardless if you have a 401k with the company you're at, or if you go in the Gov and one of my daughters is in the Gov, if do the TSP, do the 401k. But why? Because they have matching, right? Take the free money, but open up an IRA, try to max that out every year at 6,000 or whatever it is at any given year.
7,000. Yep.
Yeah. And max that out. And that thing gives you all kinds of flexibility where you can get a higher return year after year. Yes, it's a smaller pot of money. The point is, between those two, over 20 years, you're a multimillionaire. I mean, hands down. If you're actively managing both your,
if you're good at it.
Well, if you're following us,
right? Well, yeah.
We're a little biased. Yeah. All right, I keep sidetracking this, man. Finish up your slide there.
All right. So if you have an investing mindset in retirement, you're going to roll your TSP into an IRA. You're going to actively manage it. You don't have the TSP interfund transfer rules. You got, rather than 3 stock funds, a bond fund, and a money market, you have the world of possibilities for investment options. Depending on which, so again, there's an asterisk there. Depending on which company you roll into, you have more or less options. But regardless, you have way more options than we have in TSP. You got $7,000 a year contribution limit. Obviously, when you retire, you can't contribute any more money into your TSP, but you can continue to contribute into an IRA, $7,000 a year forever, right? The one downside of the IRA is that you can't withdraw until you're 59 and a half without taking the IRS penalty. So there's a third option, actually, which is kind of a hybrid, which is actually what I'm doing. And I guess I would recommend anybody who's younger than 59 and a half to think about doing some kind of hybrid, because, well, in my case, the reason is because I'm not 59 and a half, right? I'm 53. So if things go sideways for me, or I need access to cash, I can use TSP as sort of a savings account that I can manage and get way better returns than I could in a savings account. so I can continue to grow it like I have been, but I can withdraw pretty much as I want to, right? So if you have this sort of savings investing hybrid, right? Leave a portion in your TSP. You avoid the tax penalties if you withdraw, if you're under 59 and a half. You have the same management tools that we have now in TSP, same kinds of options, and you still can roll qualified money into the TSP if you want. So you leave a chunk there, literally sort of as a savings account, just that you can grow it faster than an ordinary savings account would grow. Then you take the other percentage and roll it and actively manage it. Again, very few trading restrictions, a huge range of investment options, and you have the potential and the risk, right, to grow it much faster than you would in TSP. So those are pretty much the three ways that in general you would think about how to use your TSP in retirement. I know that doesn't really answer the questions that people asked on Facebook, but we're going to get into if I roll over, what are the companies that we should roll over into? How does the whole rollover process work? Like that, those are the things that I know the question really is. But as I went down that rabbit hole, I came out of it going, there's way too much to talk about. And let's just start with how to think through how we want to be in retirement.
Right. This is kind of a heads up, right? And hopefully just enough of a teaser for you to come back and actually watch the webinar so we can dig into it. Yeah, and what's important about the fact that we're doing it as a webinar is, unlike this where it's just Jerry and I, like as a webinar, you're in there with us, and so you can ask us questions at least through the chat. I mean, one day we might get high speed enough in to bring people in video or whatever, but the point is we can get questions from you live, and we just find it a lot more useful than you guys putting it in later. So that's why we're doing it live. It'll be a lot more beneficial. Tell your friends all about it if you have anybody know anybody that you think will be interested in it, because a lot of people are talking about it on our Facebook group, but we'll put the info out later.
All right. Let's keep on moving. So the extreme bullish case. Let's take a look at this. So I put this chart up last week, and the Fibonacci retracement from the top in September to the beginning of October, right? This distance, if we do the Fibonacci extension of 161.8%, or you take this distance and multiply it by 1.618, right? That gets you to the first target of the wave 5, which we said was about 4,700. Okay. So the question is sort of how do we get there? And if we extrapolated, because this correction, this ABC correction, we said is a 4. It's some kind of 4. What if we extrapolated that on a little bit bigger time frame? So here's the chart going back to the low here at COVID. And so when I did this distance at 1.618, we get to 4158, which we consolidated at, moved higher, corrected down basically to it, and now we're moving higher again. So the next target is the 261.8% extension level. Okay. I'm not making these numbers up. It's Fibonacci was a super smart guy back in 14, whatever. But the next big target on the big scheme of things is that 261.8 level. So that's 53.67, more or less, right? 53.50, let's say, on the C fund. So how could we get there? Like, what would it look like if we got there? So we've talked about the Elliott wave progression of the whole thing, right? We had a 1, 2, 3, 4, 5 for 1, and then ABC for 2. And we were saying that this 1, 2, 3 and this 4 would get us to the 5. That was the thought, and it still is. It still is. So I'm going to introduce like a new possibility. Okay. If this 1 is in place, and I think that's a good one. This 2 is questionable, but let's call it a 2 for now. The 3 wave is an extension.
Now, why
1,
is it
2.
questionable though? Just so we don't zoom past that.
Okay. It would have been better if the 2, if it was like A, B, C, because then it would have been far enough outside of this.
Yeah, that's kind of what I was
that
thinking. That's why I brought it up. It's just because
Yeah.
it's not as deep as we'd like it to be, right?
Right.
'Cause
I
then
mean,
it's
I
it's
have
just obvious.
Right. And they should be obvious. I mean, it's just not that the 2 isn't far enough outside of the general trend to, I mean, it clearly corrects off of this.
Right.
But
for right now, that's got to be our
they're
2.
patterns within patterns, right?
Yeah.
So here's the idea. And Elliott wave, it's great. But you only know it 100% in hindsight. So if this is a 1 and this ABC is the 2, and now we're in a 3, right? What if 1, 2, 3, 4, 5 gives us the 3, right? And then we have a bigger ABC for 4, and then we go higher for 5. That's how we would get to the 261.8 extension. What we've been talking about in the past is 1, 2, 3, as this is the big 3, this is the big 4, and this is the big 5. But it's possible that this 4 right here isn't a 4, it's a 4, if that makes sense. All right. It's part of the 1, 2, 3, 4, 5 of the 3 leg. Then we get a bigger, longer, 4, and then a 5, which takes us sometime into next year and gets us up to this 261.8 target level. So none of this is obviously in stone, where it's projections. It's looking at possibilities. And so right now we had an all-time high, and this week we exceeded that all-time high. So we're going to get to that on a shorter time frame here in a second, but in the big scheme of things, this is how we would get to a much higher number on the C fund. And it's definitely a possibility. Okay. So the bonus chart is the banking index. There's a couple takeaways here. We got 1, 2, 3, 4, and we're in a 5 leg on the banking index. 5 legs, it's easy to see it, which is great. We'll figure out how high this is going to go later, but right now we just know it's going up. We got our buddy JC that likes to trade the smiley faces. This is a pretty good smiley face right here. We had a high at 135. We consolidated for a couple of weeks there at 135, and this week we just broke out above it. So banking index looks really good. The MACD went positive this week. The RSI is just about to go overbought, but as you know, it can stay above that 70 line for quite a while as price continues to go higher. So the banking index looks good, which matters because if banks don't do well, the economy is not doing well, and the stocks in general aren't doing well. The banking index is definitely something to watch. It's not that you would want to buy it. It's just that you want to know the direction that it's going. Because obviously this was the high before COVID, right? Here's COVID, and we're not too far above the prior high. And if you look at stocks and some of the other things, they're much higher. They're much higher than where we were pre-COVID. That's not really what we're talking about here. What we're talking about is the banking industry, which is a huge underpinning of everything, and it's breaking out to the upside. So it's a bullish circumstance for everything all the way along. All right. The 2-year charts. Again, the biggest thing about all these charts is the technical indicators. So these are the 2-year weekly charts. What we're seeing is we're back above the 10-week moving average line, right? The red line is the 10-week moving average. We are clearly back above that 10-week moving average line. We got a really good little smiley face there. Don't worry about the volume right here because it hadn't updated on the chart yet when we put the slideshow together, but the volume is going to be at least as high as what it was last week. There's no reason not to be in the stock funds right now. The C fund is doing great. The other stock funds we'll get to in a second, but the big thing is we put in a bottom, right? It's a little bit above that 50 line. We're here at 50. We're here at 50. Most of the time, other than this big COVID downside that took us to huge oversold levels, most of the time on a weekly basis in the last 2 years, when we approached that 50 line, that was a bottom, right? Same kind of thing with the stochastic. We hit that 50 line, it identifies a bottom, other than COVID, which got us all the way down to 20. And what happens after we hit a bottom? The market moves higher for a substantial amount of time. So the chart looks great. Could it roll over? Of course, anything's possible. But the chart looks really good right now. And the technical indicators look super strong. S fund. Maybe this week was, it didn't actually break out, right? 2,300, we hit 2,300 back in here. We hit a little bit under 2,300 here. So we're inching up. This week was a good week for the S fund. The overall trend is definitely in the up direction. We're not quite exploding out of that. I mean, this represents almost a year of sideways consolidation, represents a whole bunch of pent up energy. At some point, we should get a week that just explodes higher, and then we know the market's going higher. We don't have it yet, but the technical indicators are pointing in that direction, right?
I mean, we've been flat there for a while, right? So, I mean, there's just no reason right now to be in the S fund, right?
Yeah. On a weekly basis, there's no reason to be in it. There's not until it really gets out of that range.
I've had a few people ask me. That's why I bring it up. Is because a lot of times they'll see us be in CNS, right? They'll see us be in evenly distributed between the CS and I. And so if they haven't been following us enough or, caught these discussions about the S fund, it's really about what you're showing there, which is like it's just flat. Like there's no reason to be in there, taking that little up and down and up and down. Like why would you be in there? You can't day trade. You can't get in and out. So right now, our C fund is where we want to be, right?
Yeah. I mean, we're 100% C fund, so the C fund is definitely where we want to be.
We are. Yeah. Not everybody else is. So
no, not everybody else is. And on a weekly basis, which is what we're looking at, you can't trade this in the S fund. It's
too much
not
going
tradable.
On. Yeah, it's too much going on, and it's all on the same channel, so it's flat. All things considered, that's flat.
Right. Now, having said that, if MACD crosses to the upside, right? MACD's been trending down, and the black line has been below the red line since the top in February of this year. If the black line crosses up through the red line, that's something that we haven't seen in close to a year. It's a significant event. At the same time, the histogram, the blue histogram at the bottom here, will get above the zero line. And at that point, probably the slow stochastic will be back up here, above the 80 line. So that's when we'll know that the S fund is out of this long-term channel and is moving higher. It looks like it could happen within the next couple of weeks. And the seasonality would support that it would happen in the next week or two. So we'll see what happens. You get the RSI turning higher, MACD looking like it wants to cross, and slow stochastic has already turned higher. So we'll see. I mean, I'm pretty optimistic, but I know that the C fund is in good shape, so I'm not taking the risk on the S fund at this point. I fund is not in a dissimilar way from the S fund, except that we got pretty good support right there on a weekly basis at the 50-week moving average, which was roughly the 200-day moving average. I fund's not performing as well as the C. I mean, it was up a little more than 0.5% for the week. It closed above the 10-week moving average line, which is definitely bullish. We got a lot of negative volume throughout September. RSI definitely not sort of moving to the upside with the strength that the RSI is on the S fund. Same thing with the MACD. Is it starting to turn positive? Maybe. Slow stochastic has crossed to the upside, but not by much. So I still think the C fund is the place to be until the S and I really start turning it around. The F fund we've been talking about for a while. It's definitely not the place to be. It was a rough week in general. We got a pretty good downtrend here for the last little bit. We're below the 50-week and the 10-week. We got a big volume down week. You got the RSI trending lower, MACD trending lower and expanding. The distance between the black line and the red line is increasing. So the momentum is increasing to the downside on the F fund. The only possible, what do they call it, green shoot for the F fund is that we're getting oversold on the slow stochastic on a weekly basis. And when that happens, it tends to identify pretty major bottoms. So if you want to look at that and look at that as a sort of a bullish thing, that is, hey, we're way oversold, and when we start to turn up here, that's where you would buy the F fund, maybe. But again, we don't use the F fund unless the two circumstances are the stock funds have to be underperforming, and the F fund chart has to be really strong. And right now, there's nothing strong about this chart. You got high, a lower high, a lower high, a lower high, a lower high. You have a low, a lower low. We'll see what happens with this. Could it come down here? Absolutely. So we're talking about the F fund in terms of the chart just because it's one of the TSP funds, but I'm not anywhere near the F fund right now.
Yeah, I'm sure people are probably getting tired of us talking about how it wouldn't be in the F fund, but we're always going to cover all four.
Yeah.
And
four.
Yeah, you get no reason to cover the G fund. But we're always going to cover it because there have been times over the years where we have been in and we've done better than people that were in the the CSRI. So there are times for the F fund.
Absolutely. Yep.
But just not right now.
No.
Questions.
No. I mean, yeah. Hopefully the point we get across is that the C fund came off of September. September was a big correction. Not huge. I mean, it was a 6 or 8% decline on the C fund. Not huge. But it was 4 weeks of decline, and it hit a bottom, and it's exploded out of that bottom. So we're 100% C fund, and that pretty much says everything.
It does. And on that note, if you have questions, make sure you put them in the comment section, whether you find this on YouTube, Facebook, on our website, wherever you find it. We'll be happy to get back with you. You can also email us at support@growmytsp.com. All right, guys, that is it for the show this week. Hey, one of the things I wanted to ask you is, what do you think about this whole setup, right? I mean, we have to do this remote every once in a while. It's just, logistics. But do you like it better, worse? We always like to be, we think it's better when we're together because we get a little bit better chemistry in the same room or whatever. But we want to make sure you guys are getting the best side. It doesn't really matter what we think. So you guys tell us what you think about this. One of the things I like about it is that we're able to, kind of like look at each other and change screens a little more than we do when we're together. But who knows? It's hard to tell because I'm sitting here looking at 15 screens right now.
Right.
But
I mean, there's a lot of work, and we're playing with it, and sometimes it's going to be necessary, right? I mean, obviously we're not always in the same place.
Sometimes we won't have a choice, but it'd be nice to get some feedback and see what you guys think. Again, don't forget to be looking out for the webinar information. We're going to put a poll out to see when is the best time to do it. We're just going to have to kind of go with what the majority rules, and hopefully we'll catch as many people as we can. And that webinar will be about thinking about TSP in retirement. What do you do when it comes to retirement time? What do you do with the money in your TSP? And a lot of people are asking about it, and we've got some answers, but it's going to take us pretty much, a whole show just to do that. You got anything else for us, Jerry, before we take off?
No, I think we're good. Hopefully everybody has a great week. And yep, I do have one last thought.
I saw it in your eyes.
So,
man.
yeah. The C fund is at a double top right now. And if you go back and look at the update that we did on Tuesday, this Tuesday I put out a market update on Facebook, and I was talking about the likelihood that we hit resistance levels. And I'm going to put it out on the newsletter this weekend. There's a long-term trend line. If you look at the C fund, and for 6 months, look at the 6-month daily chart of the C fund. If you draw the trend line, you connect the bottoms for 6 months. The line extends through where it hit today. So that trend line, which used to be support for the C fund, is now resistance. And so the C fund hit it today and rolled over. It closed basically flat for the day, which would indicate sort of some downward pressure for next week. So we'll see what
downward
happens.
Pressure. Yeah. So if you remember, you guys are seeing that Jerry's been doing these market updates. Every once in a while, he'll throw one in the public Facebook group. But if you remember, you're seeing more and more of these. And when the app goes live, they'll actually be right in the app. So all you have to do is click a button on the app, and the market updates come right there. He doesn't do it every day. Sometimes there's nothing happening, in the market to do it. But generally speaking, it's about 2 or 3 times a week. And probably not on Fridays because we're going to do the show. We don't want to steal all our thunder by doing a market update on a Friday afternoon. All right, guys, if you have any questions, hit us up. And with that, we are out of here.
All right.
See you later, Jerry.
Cheers.